It's Mr. Mazier who will lead off for 6 minutes.
Thank you, Chair, and thank you to the witnesses for coming here today. Mr. Tingle, I'll start off with you. Is there any evidence that ESG branded investment funds hold more environmentally and social responsible companies in their portfolio than conventional investment funds?
There isn't much evidence of this. The Securities and Exchange Commission in the United States has been levying significant fines to a number of ESG funds that it discovers marketed themselves as ESG funds, but didn't actually make share buying and selling decisions on the basis of the ESG performance of the companies. The academic studies tend to suggest as well that I think there's at least half a dozen that find no difference between the ESG quality of the companies in ESG funds and the quality of those and the quality of companies in non-ESG branded funds. And there have been at least 3 studies published in peer-reviewed papers that find the performers in ESG funds are actually worse.
Do you believe that ESG ratings and climate-related disclosure statements are a scam?
Well, there's no question that ESG has been a very powerful marketing tool for the last 10 years. Money has flowed into funds that have advertised their ESG focus. As well, funds that don't compete for money, so these would be things like public pension funds, union funds. Those funds have political masters who are very concerned about ESG, and so those funds tend to do a lot to advertise their ESG credentials. What we've seen is that these funds don't reliably hold better ESG performers. If they do anything, they apply very crude screens that just block 1 or 2 industries like automotive or oil and gas. That's about the limit. They rely on these heavily flawed ESG ratings I was talking about in my remarks. And that when we study what they actually do with the companies, we find no sign that their ESG performance, those companies' ESG performance, is improving. So it looks like this is mostly a marketing initiative on the part of the financial industry.
Won't go public if they're forced to produce climate-related disclosure statements. Is this true, and what are the consequences of this?
So what originally got me interested in our corporate governance regime is the fact that Canadians' public markets are declining quite seriously. And so Canada had about 15 or 18 years ago, it had something like 14 or 1,500 public companies. It's now got fewer than 700 operating companies. Similar declines are visible in other markets. And so
Point of order, Mr. Chair. I'm so sorry to interrupt. There's just a microphone on in the room, and so there's an echo.
Okay, there's a microphone. Sorry, I'm going to stop. There's a microphone on in the room. Is that? Again? Sorry, Mr. Tingle. Sorry.
No problem. Yeah, I can hear the echo as well, for what it's worth. Okay, that's better. If it works for everyone else, okay. So we have this growing reluctance of companies to go public. In practice, that means that Canadian companies choose to sell themselves as a way of generating liquidity for their investors. And in many important industries like technology and pharmaceuticals, selling themselves means selling themselves to a foreign company, usually an American company. Our public markets are generally where companies have scaled up. So I've been very concerned about why companies are refusing to go public. And I think the increasing regulation we impose on companies when they go public is the most likely explanation.
There was an article in the Financial Post on Justin Trudeau's top economic advisor, Mark Carney, who was forced to retract his false claims about his company's environmental record. The article stated, and I quote, "Mark Carney walks back claims Brookfield has reached net zero after criticism. Backlash from climate experts hinged on Carney's use of avoided emissions, which a company takes credit for refraining from high polluting actions, end quote. Can you tell us what happens to ESG investing when companies greenwash their environmental record?
Yeah, I mean, so you've got two possible explanations for finance's poor performance, the financial market's poor performance on ESG. One explanation is, well, they're just not being given accurate information by the companies. And certainly there are lots of reasons, lots of incentives for companies to put the best face on their ESG performance. I tend to think fraud is not common, but there's a lot of spin in ESG reporting. The other reason to believe that, to expect that the financial market's done a poor job is that the incentives of fund managers are very strongly to generate strong relative returns in their funds. And doing that is where they invest most of their time and energy, not in reading lengthy and complex ESG disclosure, much of which is inadequate because in order to evaluate a company's ESG performance, you have to understand the alternatives strategically and in their markets to decide whether or not they're taking the right path for the company. We don't see that level of engagement in any topic in corporate governance, including straightforward topics like executive compensation or maximizing financial returns. Corporate governance generally gets ignored by investors aside from rhetoric.
Would this be considered fraudulent?
Well, the SEC's, as I say, the SEC has levied some truly eye-popping fines against ESG funds that aren't doing what the marketing material says they'll do.
Okay, thank you. I'll go to Leslie for 3 minutes.
Thank you, Mr. Chair. Mr. Tingle, I'd like to pick up where you left off talking about the SEC using fines for fraudulent claims or greenwashing. And we've seen this here in Canada with Liberal advisor Mark Carney when he admitted that Brookfield had, we'll call it overstated, that their trillion-dollar enterprise is in fact across at net zero, and it certainly had to walk that statement back. But in Canada, what body would actually investigate false claims like that currently?
The securities commissions.
So in Canada, it's the same sort of thing. Have we seen any activities like that undertaken? Any fines you're aware of?
No, and that's characteristic of a less active enforcement regime generally in Canada compared to the United States, which tends to be much more aggressive.
Do you think greenwashing and making these sorts of claims for a company like Mark Carney did should be investigated more in Canada?
Yeah, I mean, the truth is these are sophisticated entities, these investment funds, and they should be obliged to tell the truth the way every other actor in our capital markets is. We haven't particularly looked into this sort of thing, but there's no principled reason why they shouldn't.
It seems to me that we should, I suppose, remain skeptical when we have major companies like that making these sorts of claims. And, through your opening remarks, you certainly made it clear that, in your view, these disclosures don't improve outcomes, and the scientific studies or academic studies back that up. Is there any way that you think imposing these sorts of ESG disclosures will actually help Canada meet any of its climate obligations?
No, because I think the corporate governance channel is too weak to actually produce meaningful change. The truth is companies are, including financial institutions, are embedded in competitive markets. Those markets really constrain their behavior, and they're not in a position to take low or lower return make lower return investments in the alternatives, which is what we ask them to do if we ask them to voluntarily.
And so you're talking really about our pension funds. It's putting our pension funds at risk.
I'm talking about every institutional investor. They're all subject to the same pressures to improve relative performance compared to each other. And so energy and time they put into improving the outcomes in one company will sort of raise the value of the index they're being marked against. So they just tend not to be involved in for specific governance of any kind. ESG is not unusual in this respect. They just don't do it. And when we look at the way they do ESG investing, we see a similar sort of lack of attention They tend to be more focused on picking stocks and trading them.
Thank you. Mr. Deltel, for 3 minutes, please.
Merci beaucoup, Monsieur le Président. Merci à la qualité de
Thank you,
nos
Chair,
invités que
and
nous avons
thank you
aujourd'hui.
for
Monsieur
the
Chenet,
caliber
je voudrais
of
vous
our
poser une
witnesses
question.
today. Mr. Chenet, I'd have a question for you. How can a company honestly and fairly calculate its net zero?
Merci, Monsieur Deltel.
Thank you, Mr. Deltel. Well, what it can well calculate is its carbon footprint, what it emits. If we're speaking about net zero, this would be a forecast for the future, as we just discussed with Ms. McGuire. So we have to look at what we will be emitting, and that will span over a number of years, as well as perhaps decades. So it all depends on the choices we make as a company, but it also depends on societal choices, the kinds of consumer demand there is, and the products or goods that we're producing, but as well it depends on the services we use. If we look at that, we're very much dependent on the outside. It is very complicated to estimate accurately and to be robust. We will always be robust to the extent that. But given today's activities, if a company today says that it has achieved net zero or that it wants to achieve net zero, what must it do? You're saying yourself that it's difficult to calculate. So can a company proudly, or how can the CEO proudly indicate that, yes, they're at net zero? The quick answer is that it's impossible. The more complex answer is to say that if I were to take this global scenario that plays out, that if I lower the emissions by so much between countries and between corporations, that I take this portion of the world emissions, of carbon emissions, and that's one thing. That's a carbon budget. And how do I spend that carbon budget? That would be a very tangible, concrete strategy. This is why I invest in. These are the activities I start up, what I stop, how do I adjust my processes, what kind of new technologies will I apply, which do I stop using. And there we can see something more sound. But again, this would be something that would have to be applied globally. If all the world companies did this, but if they do not agree, you might have very few companies that are at net zero and will end up with 4 degrees. In Canada, we do have somebody, Mr. Mark Carney, who is world-renowned. He is currently an advisor in the cabinet of the Prime Minister, but he did avow that he said that his company was at net zero, but he backtracked on that. So what do you think about these leaders who say one thing to look like they are doing the environmentally right thing, but in fact that is not at all true? Very quickly, Professor Chenet, to be simple, on the one hand, it is important to foster a certain volunteerism, to allow people to commit, to be engaged, and that is essential in democracy, that there be observers who say, yes, you're committed, now we're going to check whether or not you're delivering. Thank you.